death of a spouse or a partner may be sudden, unexpected, prolonged, or anticipated, all fomenting confusion, narrowing one's focus, emotions, sapping time from work, family obligations. And then there are the ever-present money issues. My mother died suddenly at age 64, and she ran the finances for the family with a little help from and advice from me, but it was a double shock. Now, this video will help you cut through the confusion and safely navigate money decisions after losing a spouse. We have additional help in our videos on money shocks and My Lottery Fantasy, and we'll have links. As a CFP professional, this is a critical life event, and I think you're going to learn a lot in this video. In how to handle money after losing a spouse, we're going to show each other ways to think about priorities, actions, and safe ways to act and think about money decisions, particularly during times of pressure and stress. Now, you're watching What's Next with Money, a program with smart insights to guide your financial decisions. So here's a thoughtfully curated set of ideas to help you navigate money decisions after losing a spouse in list form. Now, this list is partially from a great author at the Wall Street Journal, Kathleen Rehl, from her book, Moving Forward on Your Own, a Financial Guidebook for Widows. Now, I've added ideas from my own experience and study. One of the key areas is to identify where our financial records are. And you can see our top-rated ranked video on organizing vital documents and financial records with nearly 10,000 views, and we'll have a link. This is by far our most popular video, and just the list and graphics in that video will trigger ideas about assets and liabilities and where key information you need to uncover and discover might be hidden. So here's some of the key things you can do. Contact your spouse's employer if he or she worked. There you might find information on pension, 401k, group life insurance, stock options, health insurance, continuance options, and other benefits. For example, are student loans being paid off with help from the employer? That's kind of a new benefit. Were emergency funds tapped into? Were loans taken out from the 401k? Are there outstanding expense reimbursements owed to your spouse? And consider other work settings where there may be financial assets or decisions, like in gig work or small business partnerships. Next, you may be the executor. So contact your financial advisors, perhaps an estate attorney and an accountant. Order 15 or more copies of the death certificate for estate settlement and for retitling of your financial accounts. And by the way, you might need more than 15 certificates. Centralize and sort bills. Monitor the mail. Have the mail forwarded if you need to kind of make sure it's in one place, like if the person had a P.O. box or a UPS store account that are rented. Always check out online accounts and monitor those. New information can come in literally weekly. And these could be transactions or accounts you may not be aware of. And for bank accounts and credit union accounts, see if there's a TOD or transfer on death notation on that account. Now, because you're going to need access to cash, and this is a quick way to receive that. Credit issues are always important, and you can see our links in this comment section and the description of this video to the CFPB, credit bureaus, and FICO for more information if credit records, and credit scores are an issue. We'll want to retitle bills and accounts that you will keep in your name. Now, if you'd like to see more videos like this, be sure to hit that subscribe and that like button, and don't forget to share. Next, there's always the somewhat sensitive issue of distribution of belongings. I'm going to give you the title of a video we'll have a link for that's kind of an odd one, called Who Gets Grandma's Yellow Pie Plate and Grandpa's Watch? This is an actual video put out by Cooperative Extension Service, great financial educators, and we'll have a YouTube link for that. Next, consider and get professional legal and financial advice on state or federal estate and inheritance tax issues, especially for larger estates. Next, online accounts. Ask for permission for accounts that you do not have. Passwords are important, but this list should be kept secure. The same for credit cards. And this is where the use of the death certificates may come into to establish your right and your authority to do this, perhaps as an executor or a trustee. And you can see our video on how to manage your digital assets, and we'll have links to that. Remember, the last thing you need during a stressful time is identity theft or a breach. And we'll have some links in the description sections on fraud prevention. Now, when a death occurs, Social Security may have a small check available as a death benefit, but timely notification is important to the Social Security office. If Social Security has been claimed by your spouse, you get the deceased spouse's benefit level if it's higher than yours. Now, not notifying Social Security in a timely manner means you are likely to have to pay money back to the Social Security Administration. Next, for your own Social Security claiming decisions, now a death that has occurred, you need to research the best age to start if you haven't already and get help and advice. And note, a survivor can claim a benefit as early as age 60. Go to SSA.gov for more information. You know, your spousal benefit becomes a survivor benefit after you report the death, and that death report is received at Social Security Administration. Now, if you both have been receiving a Social Security retirement benefit, like those checks coming in, and your spouse died, the smaller check of the two will stop. That's tough. That's like two income streams becoming one, and it's smaller. But you can see our video links on when to start Social Security and optimizing your retirement paycheck. Then there's something not often used, but it can for larger estates: disclaiming property to gift or pass on to secondary beneficiaries. This could be really for well-off survivors. Now, you will need to write a disclaimer which states that you are disclaiming from the source of where the asset is, you're part of an inheritance in writing. Within your disclaimer, you will need to explain what is being disclaimed, whether it is only part of your inheritance or all of it, as well as to sign the document to make it legal. In this case, please get professional legal estate advice. Next, when the first spouse dies, his or her estate must use asset held in the deceased spouse's name alone to settle his or her individual debts. Again, look for and receive professional advice. Now, a lot of us have heard about probate, and this may not apply in all cases, but in some cases, a form of probate may happen. Will you have to go through this? Or will most of your assets already be titled in living trusts or distributed through beneficiary designations? In both of those methods, the trust, the asset in the trust name with the trust saying who it goes to, and beneficiary designations, which are often seen on retirement accounts, life insurance, health savings accounts. Those become immediate pathways bypassing probate. It goes to the intended next, the beneficiary. So you're going to need to get legal help if you have to probate, because you're going to have to get the wills to the courts. Now, some things are exempt from probate if they're not already in trust names or through beneficiary designations. For example, property of certain values. And I don't know how many states have this, but where I live in Colorado, Colorado has a really cool small estate exemption for probate. This keeps things out of the courts that are really small. This allows probate estates that are worth up to $80,000. That's the probatable estate. That's the stuff that's not titled in a beneficiary designation transfer or a living trust, but it could be cars, personal property, things like that. This exemption allows heirs to collect those assets, $80,000 and under, without opening a probate action through the court. It's fantastic. To qualify, the estate must not contain any real property because it has to be titled in those other methods. And the descendant's personal property must be less than $80,000. Again, if a lot of the assets are in trust or the through beneficiary designations, you're in good shape here. Now, if you have out-of-state property, probate issues may come into play. And this is why it's really important, if you own out-of-state property, to try to put those in trusts. Even if it's a living trust set up, in all cases, the property has to be titled properly to be placed into the trust. You could create a legal document of trust, but unless the property that the trust talks about is properly titled in the trust name, it's not in the trust. And this is where so many estates get messed up. Especially for out-of-state property, please get advice from a lawyer who practices in that state where that out-of-state property exists, and they can help you do this. Now, what about inherited IRAs or rollover IRAs, Roth or contributory? We want to be careful in this area because this area has new laws and regulations. Now, some have required distribution time limits. Now, if your spouse has died, and let's say he or she had an IRA, and you're listed, of course, as the beneficiary in the beneficiary designations, you have a lifetime to spend down that asset, and you may not even do it in your lifetime. But if you're like the son or a daughter or some other relative or another person of the person that died, you have a 10-year clock that starts ticking to actually liquidate all the assets out of that IRA. But there are some special exemptions, like for people with disabilities, etc. Please get professional advice, especially from a CFP professional, to help you navigate this, because the rules are changing. Now, after the death, we want to change beneficiary designations to maybe now children, charity, new secondary people, distant relatives. Get CFP professional help if needed on the titling and wording and the sequencing of what order the primary and the new secondary beneficiaries should be listed and how they're titled. Now, I have a story about a very good friend of mine who died recently of cancer, and he had gone through 2 divorces, but the beneficiary designations for some of his group life insurance, maybe an IRA, were still set up in the name of one of the prior spouses. We were able to get this changed before he died. But this is a factor for retirement accounts, health savings, 529s, life insurance. And remember, some of that life insurance is often group life insurance tucked away, hidden, not thought about at your employer or their employer. And we need to update things based on how kids age, and maybe children's trust or trust for grandchildren might need to be set up. And it gets also very complicated considering blended family issues. So get help from an estate attorney. Next, apply for veterans benefits if applicable, and you can see and get more help at VA.gov. And then throughout all this, again, we want to kind of go through this slowly, but we probably need, as you can tell, we're moving toward the future with new designations. We probably need a new financial plan and see a CFP professional to help you update your plan. Next, update wills and trusts. See attorney in the relevant state where you have assets. And also, on a little bit of a ticking clock, tax returns are due. There's like a final income tax return for the person, and there may be an estate return that has to be developed. So look for tax documents in the mail or email. They may be in the form of 1099s, K1s for transaction payout, capital gains, interest income, dividend income, rental income, retirement distributions. All these have different key tax numbers and will need to be collected to get those appropriate tax forms completed in a timely manner. and get professional tax help through a CFP professional, an accountant, maybe an attorney. Next, what about something that might be missing? You know somebody, the spouse worked at XYZ company years ago, but you can't find the benefits. It could be a missing pension. There are ways to locate this through the U.S. Labor Department or the PBGC, the Pension Benefits Guaranty Corporation, and we'll have links for those. What about missing life insurance or annuity contracts? There's a really cool life insurance policy locator service put out by my friends, and I've worked with these guys before, the NAIC, the National Association of Insurance Commissioners, or your state's Unclaimed Property Fund, often located in the state treasurer's office. And of course, don't forget again, those special insurance policies. Group life insurance could be at work, through an association membership like AAA. There might be accidental death dismembership if there's been an accident, through even credit cards or again, AAA. We want to go through all these decisions in a slow, methodical process, and this is called a decision-free zone. Yet we need to address the many things you must attend to. My friend Susan Bradley, CFP, founder of the Sudden Money Institute, has created this concept that many decisions can be put off till a less stressed time when we're more in touch with our advisors and we have more context about and around what's going on and our emotions perhaps have calmed down. So I would love you, the viewers, the nexters that watch this program, to tell me what I miss. I will add them to the comment section or perhaps create another video. Now you can be more confident when this life event hits us, the death of a spouse. So be sure to hit that subscribe and that like button, and don't forget to share this important information on this critical topic. I'm Brent Nicer, looking to see you next time on What's Next with Money. And be sure to check out these videos, Money Shocks and how to organize your vital documents and records, in the description and the comments section.